Hello and welcome to today's video where we are going to cover the topic cash book for Igcse and Gcse accounting. Now, first off, we would start off by discussing what is a cash book. Now, a cash book is basically a part of a book of prime entry, all right? So you've got 7 books of prime entry, and cash book is one of them. So what is a book of prime entry, you may ask? So prime entry means where it is first recorded. So if you have a business transaction, it's first recorded in these books of prime entry. Say for example, you go to a shop and you sell an electric guitar to Ronaldo for 500, right? So when you're selling an electric guitar to Ronaldo, you're getting money for it, right? So you're receiving cash. So anything that involves cash or bank goes to the cash book. Okay, that's where it's recorded. Same way, like you have 7 subjects of school or more. You have math, physics, chemistry, and all that. According to the subject, you put your files, right? Same way in accounting, according to the transaction, we put it into a book of prime entry. So in this transaction, we have cash involved, so we put it in the cash book. If cash was not involved and Ronaldo bought it on credit, it would go into sales journal. So that's what a cash book is. Now, in this case, let's look at the journal entry. Whenever you sell something to Ronaldo, the debit is cash, the credit is guitar. Why is cash debit? Because anytime you receive something, the way I explain debit is good, credit is bad. So whenever you have a good thing, it's debited, and whenever you have a bad thing, it's credited, right? So when you receive cash, it's always a good thing and it's debit. But when you're selling your guitar, it's going away from you and that's credit. Okay? So then let's talk about these discount columns in the cash book. So this is the format of a cash book. You've got your 3-column cash book, and the reason why it's called 3-column is because of these 3 columns. So you've got 3 columns on this side and you've got 3 columns on this side. Now, the way T accounts work is you have a debit side and a credit side. So debit is when money is coming into the business. Credit is when money is going out to the business. So this is in terms of a cash book. I'm not saying debit and credit is always like that. I'm saying for the cash book, that's what it represents. So usually in accounting, debit is an increase in assets, expense, or purchase. But in this case, we're looking at only cash book. So when you receive cash or bank, it goes debit because your money is increasing, which is a good thing. You all want to be more get more money, right? And when money is leaving you, it's recorded on the credit side. That's it from your point of view. Okay, so let's look at an example over here. Firstly, you've got a balance brought forward for 620 and bank 7142. So we consider the date as 1st of January 2022. Now, whenever you have a beginning balance, right? That's like at the start of the month, we have some money, okay? So I'm just going to show you a completely solved question over here. Now, at the start of the month, we had some money in the bank account, right? Is that a good thing? Yes, it is. So that's why we put it over here on the debit side, 620 and 7142. Now, the second transaction says the following paid their accounts by check, in each case deducting 5% cash discounts. So these are my customers because they are paying me. Or they don't have to be customers. Just say they're individuals who are paying me. Anytime I get money, it's debit. So it's on the debit side. Now you have to consider that they're not paying the full amount. They're getting 5% discount. So anytime you get discount, say you got 10% on 100, you're going to get 10 discount and you're actually going to have to pay 90. Same for Gcse. If he gets a 5% discount on 260, the discount amount is 13 and he's only paying us 247. Okay? So the way we calculate is 5% into 260, you get 13, right? And 247 is 260 minus the discount amount. So he's only paying us 247 and the rest is discount. So you see how 260 is broken down into 247 over here and 13 as the discount. Same, we've done that for P-Fish, 5% for 320, and the rest we record over here as a difference, 320 minus the discount, which is 16. Okay, now why are we recording it on the debit side? Again, because we're getting money from them. All right, the next transaction, paid rent by check. Whenever you're paying rent, right, it's always credit because money is leaving you. Same way, F Black lent us 5,000 by check. Thank you, F Black, for being so nice. And because he's lending us money, we're receiving the money. So we're putting it in the bank because it's by check. So 5,000 over here, F Black. Now the next thing over here, we paid the following account. So notice this is the moment where we're paying others. So you've got R White, G Green, L Flip. So R White, we owe him 720. However, we're getting 20% cash discount. So first of all, we calculate the discount, which is 20% of 720, as you can see here. And the rest is what we actually pay him. So 576 is the final amount. How do we calculate 576? 720 minus the discount, we get 576. The same way we've done it for the other accounts. So here we did G Green, 960 into 20% is the discount, and the rest over here. So this looks a bit funny, but it should be okay. Is this 5%? Okay, it should be 20%, right? So you see, there we go. We made a, like, you see, that's how I noticed, because 5% is like too less, yeah. So you see how 192 and now it's 768. Thank God for that. Okay, so this one we've got it right. We've got it correct. The next thing is we paid for printing expense by cash. So you paid it by cash, you paid an expense, so it's on the credit side for 500. J Pie pays his account by 90. So this is another guy who paid us by check, 88, and he got $2 discount. So put the dollar discount amount here and put the amount he paid us over here. Cash withdrawn from bank for business use. Whenever you withdraw money from the bank, so basically you're taking money out of the ATM machine and you're putting it in the wallet. So anything that goes out of bank is on the credit side because your bank is decreasing and it's going to your wallet, which is cash. Same way, your cash is increasing, and where is the source? The source is bank. So on this same day, you have on the two sides of the cash book, all right? So this is called a contra entry. A contra entry is when it's a transfer between bank and cash, and it's on the both sides of the cash book. The last things are, you've got fixtures by check, so you paid your fixtures here, again credit by check, remember. And another thing is commission, which is on the 30th. Right. So now let me quickly show you how to balance. The way we balance is, over here we just add the total, we get 52. We add the total over here, we get 656. But when it comes to the cash column, you gotta do something else. First, notice that I calculated the discount like both columns for cash. So the total of this column was 1020. The total of this column was 500. Okay, so these figures were not there at this moment. Okay, so 500. So now heavier side will come on both sides, 1020, 1020, and the difference we will put here as balance CD. Now balance CD means balance we're going to carry forward to the rest of the month. So we have 520 over here. We put this figure. Now you see you have 1020 on both sides equal. So this makes it balanced. Same way, we look at the bank column. We add this side and we get 13,300 and we get 4,174. So in this case, we put the difference of 13,300 minus this. We get this amount over here. And both of these balances are carried to the beginning of the next month on the opposite side. That's it for all. Stay tuned for more, and I'll come back with another video. Bye.